Hi, you are listening to Equity Master Stock Market Wrap Up. A very warm welcome to all of you. This is Rini. Media headlines like crash, crisis, volatility have now become a regular feature these days. This week too, share markets remained quite volatile. In fact, the Sensex has wiped out its gain of 2018 completely. It had crashed over 1000 points intraday at one point, and it also rallied over 700 points by the end of the week. Since September, when the ongoing correction began, the market cap of all listed stocks has eroded by rupees 22.7 trillion. The turbulence in global markets added to India's existing woes of high oil prices, a weak rupee, and foreign portfolio outflows. Now, for all that's going on in the stock markets, the macro picture, rupee, and oil woes, I'm going to talk about all of it today. So, let's begin with an overview of what I will cover in this week's podcast. IPO listings this week. RBI injects 120 billion rupees into the system to manage liquidity. Government cuts excise duty on jet fuel. Mutual fund houses pump over 116 billion in equities last month. Top stocks and second quarter results in focus this week. Later in the podcast, we will be joined by our research analyst Radhika Pandit. She will be presenting us with the issues of India's PSU sector and stocks that could make a good buy. Well, here's a glimpse of Radhika's insights.
Let me add over here that a lot of these PSUs typically are present in capital intensive industries, and yet the good ones have debt equity ratios which are quite healthy.
Well, this is coming up later in the podcast, so stay tuned to find good PSU stocks. Now, let's have a quick look at broader cues. The stock market sell-off resumed on Thursday after a one-day break as a global rout forced the Sensex to give up all the gains made so far this year. The Sensex and Nifty were at 6-month lows on Thursday, following a sharp fall on Wall Street the previous night, triggered by worries over rising interest rates, anxiety about tech investments, and trade conflict. The Sensex had plunged about 760 points to close at around 34,000 levels. The plunge was followed by a slump in global markets. On Wednesday night, the Nasdaq Composite in the US shed more than 4%, while the S&P 500 dropped 3.3%, led by a sharp sell-off in technology shares and worries about rising interest rates, prompting US President Donald Trump to attack the Federal Reserve. In a volatile week, the Indian stock market had also posted its biggest single-day gain in 6 months, while the rupee had snapped its 7-day losing run, encouraged by the rescue package for finance companies by SBI, about which I'll talk in a bit. Now, speaking of Indian currency troubles, the rupee on Friday opened 33 paise higher at 73.80 against the US dollar. The local currency advanced 9 paise to end at 74.13 per dollar on Thursday after falling to a fresh lifetime low in an intraday trade amid a sharp sell-off in global markets. Softening crude oil prices and some weakness in dollar against other currencies provided support to the rupee. In the international market, Brent crude price slipped from 84.98 US dollar on 1st October to 80.71 US dollar on 12th October. Now moving on, 2 IPOs were listed on stock exchanges this week. Aavas Financials on Monday made a weak debut as it opened at a discount to its issue price. The IPO opened at Rs 746, a 9% discount to its issue price of Rs 821. Meanwhile, Garden Reach Shipbuilders also listed at a discount of Rs 104, that is a 12% discount to its issue price of Rs 118. In another news, the RBI announced that it will inject Rs 120 billion liquidity into the financial system through purchase of government bonds on October 11. This was done to meet the festival season demands for funds. The auction to purchase the above bonds is a part of the open market operations by the central bank to manage the liquidity into the system, which seems to be facing liquidity tightness. Open market operations are tools which can be used to either inject or drain liquidity from the financial system. It is employed to adjust rupees liquidity concerns in the market on a durable basis. If there is excess liquidity, the RBI resorts to sale of securities and takes out the rupee liquidity. When the liquidity conditions are tight, it buys security from the market, thereby releasing money into the market. The government on Wednesday cut excise duty on jet fuel from 14% to 11% to help keep airfares under check and to give relief to airlines troubled by high fuel prices. The move comes at a time when high jet fuel prices and a weaker rupee have kept airline finances under pressure, with companies having limited headroom in raising fares without losing market share, as the domestic aviation market is very price sensitive. Excise duty on jet fuel was increased in March 2014 from 8% to 14%. Moving on, mutual fund houses have made investments of over 116 billion rupees in domestic equities in September, despite volatility in stock markets, even as foreign investors pulled out a massive rupees 108.3 billion. It looks like for domestic equity mutual funds, the recent market correction has provided a good buying opportunity for investors, and mutual funds are trying to capitalize on the same. While there is a legitimate fear about the bleak macro environment along with the liquidity in the NBFC space, research analyst Kunal Thanvi, editor of Smart Money Secrets, believes this fear is being extended too far to some very strong business. Kunal says, and I quote, "These corrections are a clear sign of fear across sectors and individual stocks. While considering stocks for Smart Money Secrets, I believe these deep corrections are a buying signal for select quality companies. And for strong business you have already bought, this can be a good time to add more." Unquote. You can follow Kunal Thanvi's recommendations by just logging in into smsoffer.in. Now let's look at the stock specific activities this week. On Tuesday, Tata Motors shares fell as much as 14% in intraday trade to Rs 183, a level last seen in 2012. This came on back of a fall in sales by company's subsidiary Jaguar Land Rover. JLR reported a 12.3% decline in global sales and announced shutdown of its West Midland plant for 2 weeks due to weak global demand. The company's sales in China declined by 46.2% during September compared to same month last year, as ongoing uncertainty resulting from import duty changes and continued trade tensions held back consumer demand. Tata Motors has corrected significantly since the beginning of the year, but it's not the only one. The average stock has crashed over 46% from its 52-week high. With earnings season kicking in, the IT giant TCS delivered robust profit growth for the second quarter of fiscal 2019. The net profit of Tata Group company grew 22.7% during the September quarter to Rs 79 billion. The firm had posted net profit of around 65 billion rupees during the same period last year. Hindustan Unilever, Karnataka Bank and Tata Sponge were also among the companies that announced their results this week. Now moving on, as per the reports, State Bank of India will increase its portfolio purchases of loans from NBFCs this year as it looks to provide the much needed liquidity to the fund-starved sector and simultaneously fulfill its priority sector obligations. NBFCs are facing liquidity pressures after infrastructure financier IL&FS defaulted on multiple payments since late August. Well, now let's move on. So last week, the government directed the oil marketing companies to absorb a cut of rupees 1 per litre of petrol and diesel. It is expected that this will lead to around rupees 45 billion hit in net profits. Another example is that of the banks. Last month, the government proposed the merger of Bank of Baroda, Dena Bank and Vijaya Bank to create India's third largest lender. The government seems quite hell-bent on pouring money into chronically loss-making public sector enterprises. And mind you, it is ultimately the taxpayer who ends up paying for this. Some of the examples of such public sector loss makers are Air India and Hindustan Photo Film Manufacturing Corporation. So what lies ahead of these PSUs? Does that mean you should stay away from all PSU stocks? At Vivek Kaul Publishing, we have seen Vivek Kaul consistently write about the mess in India's public sector. If you aren't following Vivek yet, you can visit vivekkaulpublishing.com to know about his insightful opinions and analysis on India's economy. But to show us the brighter side of PSU sector, we have research analyst Radhika Pandit on board with a contrary view in this space. She is the editor of the India Letter. Hi Radhika, thank you for joining us. It's a pleasure having you on board.
Hello, nice joining.
So as I was talking to my listeners about the public sector woes, we have heard Vivek Kaul discuss about many such cases of public sector enterprises continuing to bleed and the government continuing to bail them out. While these issues remain, should the investors stay away from all PSU stocks? Also, could you explain in brief to our listeners what exactly is going on in this space?
So right now there is quite a bit of negativity surrounding public sector companies. Take the case of Air India for instance. Now Air India is not listed, but it is a company that has been reporting bigger losses year after year, and yet the government keeps pouring money into the carrier to revive it, and it's pretty futile because this money could have been productively employed elsewhere. Then you look at the listed PSUs. Now, the bigger and the important ones are obviously not in the same story state like Air India. But there are problems nevertheless simply because they are at the mercy of the government when it comes to arbitrary policies. So, as you just mentioned, the government recently announced a cut in diesel and petrol prices. Now, a majority of this will be borne by the government, but some burden will be passed on to oil marketing companies, and this will take a big hit on their profits. And not surprisingly, this led to a steep correction in their stock prices in an environment when there has already been an overall correction. And of course, then there are public sector banks and the problem of bad loans which have been piling up on their books. And this is something that Vivek Kaul has been writing extensively about in his diary. So I'm not saying that you should entirely stay away from PSU stocks. Yes, there are these problems, but ultimately it all depends upon your risk appetite, and you should definitely be very selective when you choose to invest in them.
Okay. So, what should investors look at before investing in PSU stocks?
So, like I mentioned, most PSUs are established players in their respective sectors. However, many of these industries are regulated. So, the first thing that investors should see is they should try to gauge to what extent the business operations of a particular PSU company will be impacted by government policies. Then the next step is to look at the financials. Now, the growth prospects for a typical PSU company will be pretty modest. So the main thing is to look at the balance sheet. So are the return ratios very strong? Is the debt equity ratio healthy? Let me add over here that a lot of these PSUs typically are present in capital intensive industries, and yet the good ones have debt equity ratios which are quite healthy. But the main reason that makes PSUs attractive is the prospect of enticing dividend payouts and yields that they offer. And again, it really depends on the valuations. If valuations are very, very cheap, despite all the negative risks that I have just pointed out, then one can still consider investing in them.
Well, that's insightful. So, are there any PSU stocks that could create value for the long-term investors?
Yes, I believe there are. In fact, I had recommended one such PSU stock under India Letter a couple of months ago. This is a PSU company which has a strong balance sheet. It offers a very good dividend yield. And I felt that it was not as regulated as some of its PSU peers are. And yes, I will consider recommending more PSUs as and when the opportunities arise.
Right, absolutely. Dear listeners, that's words of wisdom from Radhika Pandit, editor of the India Letter. Thank you, Radhika. So, to sum up, not all PSU stocks are failures. Some of these companies are pretty decently run, but only some of them. So, watch out for Radhika's recommendations in the India Letter. Just log on to indialetter.com to pick the best rewarding PSU stocks. Well, that's all from us today. Before I sign off, I would like to know whether you like our podcast. Is there anything specific that you would want us to cover? We would love your feedback. So just visit equitymaster.com and drop us a line. We look forward to hearing from you. Thank you and happy investing.